Hey guys, welcome back. In this video, we are going to solve one problem from partnership under Goodwill. Okay, this is one of the comprehensive problem under Goodwill concept. So this will give you a complete understanding of what is Goodwill and how we are sharing the Goodwill and how the new partner is paying for the Goodwill to the existing partners. That those things we are going to see now. Okay. In this method, we are going to solve the problem by weighted average profit method. Okay, weighted average profit method is while we are finding out the goodwill, right? So when we are finding out the goodwill, we are going to use this method to find out the goodwill, and then we are going to find out the portion of goodwill for the new partner, right? Let's quickly get into the problem. Okay, there are two partners, which is CU and AU. Okay, they are sharing the profits and losses at 2:3. Okay, they have decided to admit AG, okay, who brings 2 lakh as capital. Okay, 1 minute. Okay, instead of this we can put it like this. Okay, right. Okay, there is existing partner, which is CU and AU. Okay, what's the old PSR? Old PSR is 5:3. Okay, they are planning to admit new partner, which is AG. Okay, what's the capital brought by the AG? Capital brought by AG is 2 lakhs for 1/4 share. Okay, 1/4 share. Okay, new profit ratio is 2:1:1, right? Then salary. How much is the salary for CU? Which is 2,000 per month. No other persons are getting salary. Okay, and it was revised to 3,000 per month from 1st October. Okay, October. Then interest on capital 8%. Okay, capitals remains unchanged for CU and AU, which is 4 lakh for CU, and AU it is 3 lakh, right? Then they have given the goodwill details. We need to find out the goodwill. For that we need the profit for last 4 years, or for the given time frame we need. So goodwill, number of years purchases, three years. This is just a multiplier for a weighted average profit. This will actually tells us how long the goodwill will sustain in the business. So this is it. And what we also have to find out is weighted average profit. To find out this weighted average profit, we are given with the 4-year net profits before charging interest on capital and salary, and then they are given some rectification entries also, which is machine costing has been treated as expense, and then depreciation not considered, and then stock overvalue, and then loss of fire not considered in trading account, and then they include bad debts of rupees 5,800. debtors as okay, debtors included the bad debts also for 5,800, which we have to remove and show it as a expense, right? Then AG, if he shall bring his share of good. Okay, AG brought the total amount of goodwill as a cash only. Okay, Let's quickly find the problem. Let's quickly work out the problem. Okay, how many steps are involved here? First, we need to find out the goodwill. Okay, so valuation of goodwill, then goodwill share for AG, calculation of sacrificing ratio, and then journal entries. That's it. So only 4 steps. Okay, answer. Now we are going to prepare the statement of valuation of goodwill. First we need to rectify the profit, right? So let's prepare the statement of adjusted profits, right? First, adjusted profits will used for valuation of goodwill. 4-year profits have been given, and there are rectification also has been given. So 4-year profit, which is 16, 19, 16, 17, 17, 18, 18, 19, 19, 20. Okay, what's the profits? Net profits, profit before charging interest on capital. Okay, interest on capital and salary to CU. What's the profit for all the years? 210, 260, 210, 305 lakhs. Okay, then 3,05,000. Then we have to remove the interest on capital, right? We have to pay, because this is not charged the interest on capital percentage, which is how much? Interest on capital percentage, 8%. 8%. Okay, what's the interest? What's the capital they brought? 4 lakh into 8%. Percentage. So total is 4 lakh into 3 lakh. Okay, 7 lakhs is the existing capital in the business. See, 4 lakh by CU and 3 lakh by AU. Okay, so 7 lakh into 8%, which is 56,000. We need to reduce from all the years. See, all these profits are subject to this rectification only. Okay, so all these profits are before charging the interest on capital only. So that's why we are reducing it in all the years. Okay, then salary to CU. Salary to CU is 2,000 into 12 months. 2,000 into 12 months. Then in 2018, there is a change that, see, in 2018 from 1st October, the 1st October, where it is, okay, from 1st October 2018 it revised to 3,000 per month. Okay, well, then 2,000 into 6 plus 3,000 into 6. Okay, then 3,000 into 12. Okay, 24,000. 2,000 into 6, which is 12,000 plus 30,000. then 3000 into 12, which is 36,000. That's it. We have entered the salary to CU. Then what's the, let's quickly get into the rectification part. What they have told: machine costing 40,000 purchased on 1st October, and it was wrongly charged to the revenue. Okay, wrongly charged means they have reduced the P&L, means they have treated the machine as the expense. If the what happens if the machine has been treated as expense, we are showing it machine under the asset part as 40,000, but we have reduced the P&L by 40,000. So we have to reduce from here and add back to the asset area. So for that, what we have to do, we have to add back the expense done for the machine, which is 40,000, in which year they purchased. Okay, purchased on 18 to 19. Then there is a depreciation for machinery. So depreciation at 20%. This we have to charge from net profit. So net profit will reduce for depreciation. Okay, so how we have to charge the depreciation? 40,000 into 20%. Machine was purchased on 1st October, so 6 months. 6 by 12. 4,000 is the depreciation. So the machinery is depreciated on WDV method. So we have to reduce this existing depreciation with the original asset value. So which comes around 36,000 into 1 year, and 20% comes around 7,200. Okay, 7,200 is the depreciation. Then what else we have? Depreciation part over. Okay, stock on 31st March was overvalued by 20,000. Okay, the closing stock was overvalued. So what happens if the closing stock is overvalued? If the closing stock is overvalued, profit will increase by the same amount. If closing stock is reduced, profits will reduce to the same amount. Okay, this is purely related. What happens if the opening stock is reduces? Opening stock is increases, closing stock will reduce. If it is 70, it will be 30. If it is 80, it will be 20. So this is purely reacting opposite. Let me give a detailed chart. Okay, for example, let's take a trading account. Okay, you have a opening stock which is, let's take 100, purchases 400, closing stock 500, sales 600. Okay, to GP, what's the GP? 1,100 minus 500, which is 600, right? What if the closing stock increases to 500, from 500 to 600? Then our profit will increase to 700, right? If it is 800, then it would be 900. So what if the opening stock has been increased to 300? Then our GP will be reduced. So opening stock reacts to GP in opposite manner. Closing stock reacts to GP in the same manner. Okay, so if if closing stock increases, GP will increase, net profit will increase. If opening stock increases, gross profit will decrease. Okay, that's the thing we have to understand here. So what the scenario we faced here, closing stock has been increased by 20,000. So we have to, our profit also would have been increased by 20,000, right? So we have to reduce that. Overvaluation of closing stock during which year? March 31st 2018. This year 20,000 we have to reduce. Then if it is overvalued at the closing stock, it would be overvalued on the opening stock also, right? So it would have been reduced our opening stock during the 2018 and 19. Okay, so we have to increase that. Which is 20,000 added. Next, there was a loss by fire amounting to 10,000 in the year 2016 to 2017, which was not considered in the trading account but correctly debited in the P&L account. Okay, when it comes to abnormal loss will be comes under the trading account. Okay, not P&L account. Loss of stock. Okay, so it should be shown under here. So it has been reduced our profit already, so we have to add back. Okay, add abnormal loss. How much? Which is 10,000 in the 16-17. Then what's the entry? Included the bad debts. Okay, we have to remove that. If since we have added the bad debts, recognize the bad debts as the amount receivable, our net profit would have been increased. So we have to reduce by 5,800 during 2020. Okay, last year. Which is 5,800, right? That's it. Let's quickly total the values. 2,10,000 minus 56,000 plus 24,000 plus 10,000, which is okay, 1,40,000 is the adjusted profit. 2,60,000 plus minus 56,000 minus 24,000 minus 20,000, which is 1,60,000. Then 2,10,000 minus 56,000 minus 30,000 plus 20,000, which is, sorry, we have to include these many items. 4,000, which is 1,80,000, right? Then 3,05,000 minus 56,000 minus 36,000 minus 7,200 minus 5,800, which is 2 lakhs. Okay, we found out all the adjusted profits. Now we have to find out the weighted average profit with these profit values. What's the average profit? What's the profit? 16, 17, 17, 18, 18, 19, 19, 20. 1,40,000, 1,60,000, 1,80,000, 2 lakh. Okay, what's the weight? Highest weightage will be given to the most recent year. What's the most recent year? So 1920. So 4, 3, 2, 1. Multiply this, we get the weighted average weighted profit. 1,40,000, 3,20,000 into 3, which is 5,40,000. Then 8 lakhs. Total this we get 1,40,000 plus 3,20,000 plus 5,40,000 plus 8 lakh, just 18 lakhs is the weighted profit. Okay, so we got the weighted profit. Now we have to find out the weighted average profit. Okay, 18 lakh is the average profit, weight is 10, so 1,80,000 is the weighted average profit. So we got the weighted average profit, which is 1,80,000. Okay, with that we can find out the goodwill, right? Goodwill is equal to 1,80,000 into 3 number of years of purchase. 1,80,000 into 3, which is 5,40,000. In that, AG gets 1/4 of the share. See, AG gets 1/4 of the share. So 1/4 means 1,35,000 worth of goodwill goes to AG, right? Then what's the sacrificing ratio? Now we found out the goodwill. Let's quickly find out the sacrificing ratio. CU, AU, AG, right? CU, AU, AG. Okay, old is 5:3, new is 2:2:1. Old 5:3, new 2:1:1. Okay, minus. Okay, 5/8, 5/3/8, 2/4, 1/4, 1/4. Okay, this comes around 5 minus 4/8, 3 minus 2/8, minus 2/8. Okay, 1/8, 1/8 minus 2/8. Sacrificing ratio is 1:1. Okay, so rupees goodwill share, AG's goodwill share is 1,35,000. 1:1, 1/2, 1/2 divisible by 2, which is 67,500 shared by CU, and 60,500 shared by AU. Okay, right? Now we got the values. Now we are going to give the journal entries, right? First, AG brings money to the firm, which is how much he brought as a capital, which is 2 lakh, plus he has to bring 1,35,000 also, right? Because in the question what they said, AG shall bring his share of goodwill in cash. Okay, so he brought the capital also, he brought the goodwill share also. So 3,35,000 is the amount brought by AG to AG's capital account. Okay, now he has to pay the goodwill share. He has to pay the goodwill share amount to the respective partners, right? So AG's capital account debit to CU capital account and AU capital account. How much? 67,500, 67,500, 1,35,000. That's it. So what happens? We are given with the net profit, but not adjusted profits. We have the adjusted. We have found the adjusted profits by considering the rectifications and treatments which has been not done. So after finding the adjusted profits, we found the weight and weighted profit. With the weighted profit, we'll calculate the goodwill and number of years of purchase. With the number of years of purchase, we found that 5,40,000 is the overall goodwill of the company, and 1/4 share goes to new partner AG, 1,35,000. So AG also brought the goodwill share in cash. So we found the sacrificing ratio, which is 1:1. Okay, 1 is to 1, and your 1 is to 1 comes around 67,500 by CU and 67,500 by AU. So journal entries for bringing the cash into the form, which is bank account debit to AG's capital account, then paying the goodwill to the respective goodwill share amount to the respective partners comes treated as AG's capital account has to be reduced to the amount of goodwill, and it has been transferred to AU capital and CU capital, right? 67,500, 67,500. That's it. Thank you.